Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for Monday, April 7th, 2025. Before we get started, this little otter wants you to hit the like button. Go on, do it. Make him happy. Make him happier. Look at his little smile. He wants you to do it. All right, let's dive into the charts. So yesterday, during our weekly TA, we also then went over our regular charts here. The 90-minute chart was showing us a bear flag, and that bear flag would have played down, or did play down to roughly $74,500. Has since bounced back up and is right about where we were yesterday. So let's get rid of this bear flag. And what do we see now? Well, now we see the possibility of forming an inverted head and shoulders pattern. A wonky one. There's no real shoulder here. There's that. If you count the wicks there. Shoulder, head, and then we'll need to see another shoulder there. Now, if we can see that head and shoulders, the measured move of it would be from the tip of the head to the shoulder line. And then we would move that to the shoulder line. We're not counting this wick, but that is a good wick. It says, hey, we came back up. Could have even I'll show it to you on the 22 here. Check this out. Doesn't this kind of look like a diamond pattern almost? I can draw it out. Peak to peak. Low to low. And then what we would see is another low to another low up here somewhere. Should be around there somewhere. And then our next high, wherever that would be, perhaps somewhere around here. That would form a diamond pattern for us. The diamond pattern, they are a reversal pattern. Reversal from whichever direction we came from. We came from the upside, from above us, so we came down. Diamond pattern could mean a move back up to, where we came from. Now, if that happened, that would be great. We could see, move back over the 200 here on the 22. That could be a start for a move back up to the 200 here on the 90 as well, and possibly reverse it. Where would that reversal take us? Let's get rid of this diamond. Leave that there. All right. So yeah, hopefully the diamond hits on the 22. Hopefully this inverted head and shoulders hits, brings the 90 back up to 84,000 roughly, right up to its 200-day moving average. Not 200-day, but 200 moving average here on the 90-minute chart. The Stokes are overbought though, and the RSI is not broken into bullish territory. It seems to be getting stuck here. What does that tell us? Well, that tells us that we're going to see a little bit more downside here. We could see the RSI put in a higher low again, which would be great, and then break into bullish territory, which would be good. And that would support this inverted head and shoulders. How low do we need it to not get? Well, we would want it to not break back under 77, really. We need 77 to hold. 77 can hold, then great. If not, well then we're losing our last chance for all-time highs. What do I mean by that? Well, we'll skip over this this one on the 6-hour chart. We gotta get rid of this double bottom that we were doing here. We can leave the fib retracement. This bear flag still has a chance to play all the way down here to about 68,000. Keep that in mind. However, 77 is a spot where we've bounced before. Here, almost there as well. And anywhere else, back yonder on the way up, was also a resistance for us. So yeah, the 77 needs to hold for us. Needs to hold. If it can, we're going to take a look here on the daily. Make it bigger for y'all. On the daily, we got this bull flag still. Where would that bull flag be invalidated? Here, if we lose that 77 as support. It's still support. How would it be broken? If that daily closes under it today, then tomorrow's candle at 8 o'clock today will open under it. If a candle opens and closes under that 77, consider it lost. If we lose that as support, then basically we can consider this bull flag done for. Now, we are still seeing this downward trending wedge, which usually turns into an upward trending wedge. But, yeah, being this low makes me nervous. We're under the 200 on everything again. I mean, we're getting back over it on some of these lower ones. The 5 minutes over it now. That could be a sign that we're moving back to the upside. That could drag the 22-minute up. And then that would drag the 90 up. Even though the 90s Stokes here are in overbought territory, we could see what happens. Hopefully a quick move down, a quick move back up. Well, a quick move down and then a slow move back up as RSI pumps and price pumps too. That's what we're hoping for. But hey, if we actually lose that 77 though, we're in for some not so happy times. 68 would be next. 68. Yeah. Anyway, so with where we're at now at the 77, we could still, technically get all-time highs from here, from bounce from here, with this bull flag playing out to about 115. However, if we go lower down to 68, you can see that move would be that it wouldn't. Well, that wouldn't be the measured move anyway. But at that point, moving back up to where this downward trending wedge plays out, which is back at all-time highs, would be the likeliest upside move. That would be the only real upside potential on maybe in May we'd get up there. We need April to turn around. We need to see a real great April, but who knows with the way that the markets and everything is going on globally. Who knows? We'll see. That div is still there, and technically it's even more divvy now. Because, so check it out. With price action putting in flat lows, while RSI puts in higher lows still. So there's still a div. We still could bounce from here. This is our last hope. We need a bounce from here. All right, I'm going to call it at that. Thank you guys so much for watching. You're awesome. Much love. See you later.